All right, everyone, you're finally starting to see what I've been warning about for a while now, actually since January. The tides are definitely turning on this market. We've continued to increase our short position each day, not each day, but throughout certain days, initiating SQQ, then SRTY, then adding to SQQQ, then adding to SRTY. Well, today the NASDAQ and the Russell 2000 both broke through their 50-day moving averages on very, very strong volume. And on top of that, I want to show you something that's even more important. The volatility index, which you're looking at right now, is at 1493. This index was only up 6.50% today. Compare it to the most recent lows in March when it hit 17.82, and now look at the NASDAQ. So basically, when we were around 42.45, there was more fear in the market than being at 41.73. This tells me that people believe that stocks are buyable on this pullback. We already know that investor sentiment is extremely bullish in the AAII and the II surveys. So you got that going against you. You have the VIX clearly telling you that there's no fear in the market. We have some shitty IPOs. Candy Crush just IPO today. All they do is lose money. And you can see that most recent IPO, Castle Light Health, when that came public last week with the shitty numbers that this thing had. If that didn't tell you that we're in possibly a market that's in a small bubble, I don't know what has. Plus, let's not forget, even though we don't really look at it that much, I mean, on weekly charts, some of these stocks like Biogen, I mean, look at this crap from the 2008 lows. You know, we were starting to get into rocket ship mode. The one thing that did not happen though is we did not have ending parabolic volume. So even though we got extremely extended and tried to go parabolic, which is why I thought we still had one more blow off leg higher, we didn't. And now we're starting to sell off in higher volume. So once again, another big round of sells tonight. I'm going to go over the full sells. Gomo's out. DHT is out. All of these full sells, by the way, we've already partialed out of all of them. So you've already locked in profits on most of these positions before we're now completely getting out. But I want to get out of track, BX, CSGP, TARO, GCAP, and Facebook simply because of the way they're acting. I also have a ton of partial sells, and I recommend you go look at the partial sell section or the new position section to check that out. And this goes to remind me, I think I spent $30 in commissions. Wait, probably spent $40 in commissions the past 2 days, another $20 the day before, $60, and then there was $80. So I'm probably spent about $100 in commissions during the past 2 weeks. However, I've made thousands and thousands of dollars on my short positions, so it adds up. But this goes back to the thing. My methodology, if you have only $5 or $10 or $20,000, you're gonna have to put larger positions. So like my SQQ and SRTY is 5% today. You might need to make that 20% to make investing in this particular methodology relative to your account for growth. Me with a large number, the commissions are minute, don't affect me that much. It's like a little whatever. It's the cost of doing business. Still, I would love to go back to 5, 10, 20% long positions in my account like I was doing from 1998 to 2008. But this is what we need. We need a real reset in this market. It looks like we're starting to get it. Now, I want to go back to this overall index. So now, you know what? Now with the NASDAQ starting to crack the 50-day moving average, no fear, bullish sentiment, the Russell 2000 doing the same thing. Don't forget, interest rates are going up. The main thing is you don't fight the Fed. If they're taking tapering and quantitative easing off the table, reducing their asset purchases by $10 billion each month in the bond market, and you know rates are rising, how the hell do you think that's going to affect the economy whenever you have such a bifurcated economy between the ones who have all the money and the ones who do not? It's not going to spell good for even those with assets. Plus, whenever we thought that we maybe had some inflation rally, you got gold starting to break down. And if you think that there's anywhere to hide, you don't really have it. Healthcare stocks aren't doing that good. REITs the ones that were just looking strong look like they want to roll over. The utility index, that still looks decent. But if you look at some of the leaders, like your cloud computing stocks with the SKYY ETF, you can see that it's breaking down. TAN, you can see that it's breaking down. And the biotech stocks, they're about ready to eat shit, is what it looks like. So I don't know, man. I got a lot of people that want to buy this market, and my charts are ugly. My long scans are ugly. Do you know how many stocks I actually had in my long scans? Legg Mason, LM, this little piece of shit, Escalada Incorporated, and then Health South. So I got Health South and Legg Mason as the only two stocks in all of my long scans. That's not good. My short scans are loaded, and I mean we got breakdowns in the ETFs on heavy volume TQQQ, confirmed in the inverse ETF and confirmed in the index, confirmed in the regular ETFs like QQQQ, IWM. And what's funny about all this is that the Dow Jones Industrial Average and the S&P 500 are still trailing above their 50-day moving average. Once these things roll below it, all hell should break loose. So I'm kind of in the camp, which I don't know. I don't think this market's going to pull back into a bear market. I think we're looking at a possible crash or mini crash based on the way things are set up. This is what I want to see. This is what I'm looking for, and hopefully it happens, because we're going to make a lot of money if this happens. If it doesn't, it's going to be a long time before long positions come back in vogue. So patience is definitely recommended here, especially if you don't have any short positions. It's a little late to start piling into shorts now, but you can increase and start a small position. If we bounce and fail at the 50-day moving average or some resistance lines, excellent. I plan on getting short and short and short this market based on what I've seen since 2008. It starts to make sense, and it will only make sense if we finally crack here. If we don't crack here, find a support rally higher, because God knows why, then whatever, we'll switch, get out of our shorts, get long and or in cash, and take signals as they come. But this time, this looks a little different. We'll see if that's the case.